Welcome to Tampa Home Talk with your host, native Tampa real estate girl, Katrina Madewell, a full-time, passionate, out-of-the-box thinker, love for home ownership kind of realtor with over 21 years of combined mortgage and real estate experience. Tune in every week at this time for expert advice on everything you need to know about home ownership, finance, maintaining great credit, building wealth, and making your everyday life better, and how you can be financially successful today and tomorrow. Remember, love where you live or let Katrina fix it. Now, here's your host of Tampa Home Talk, Katrina Madewell.
Hey, good afternoon. Thank you so much for chiming in with us today. We are happy you are here catching our show. If you're just catching us for the first time on one of our stations, we are located on several stations all over the U.S. And the mission of our show here is to help you keep and maintain great credit, live within your means, and build wealth. And my team and I are absolutely passionate about it. If it falls in and around the real estate space, of course, they're always great guests. And we love to talk about topics for questions that we get all the time. And so today's show, we're going to talk about insurance. And so we're having a guest that we've had in the studio before, Paula Blanda with West Coast Insurance Group. Welcome back, Paula.
Hi, great to be here, Katrina. You look great. Great to be here.
Thank
Lots
you.
of stuff to talk about.
You're beautiful as ever, and you always sound fabulous on the radio.
You're wonderful.
And we have John Barry. He's also with JB Health and Life Solutions, and we're going to talk a little bit about Obamacare after the second segment of the show. So thank you for joining us.
It's my pleasure. I'm going to try to keep up with all the good cheer and laughter here.
I know, Paula, she's a hard act to follow.
She is a hard act to follow.
Oh, you're too kind.
So, Paula, what's going on in the flood arena? I was blown away with our conversation the other day. There's so many changes, which is why I love to have you in because you're always up to speed.
Oh, thanks, Katrina. Well, there are many, many changes. And if we can go back just a bit, especially for all our realtor listeners out there, the National Flood Insurance Program was started back in the 60s. Prior to that, there was really no one doing flood insurance, some companies here and there. But they started back in the 60s and were giving credits to some of the older homes. So now let's step back 40, 50 years later. They were bleeding money. So the government said, wait a minute, we've got to stop the bleeding. They initiated what we called the Biggert Waters Flood Act a couple years back.
Which we had a big show on that when we were seeing craziness for flood. I mean, we saw a flood policy. I think I told you this. It was like $35,000 a year.
Exactly. And didn't it kill the market there for a while?
Yeah.
It definitely. We were ground zero here in Pinellas County, Florida, with more homes affected.
I mean, the flood insurance was more than the mortgage payment on some of those. It's ridiculous.
Yes. Well, what's happened now is this is through FEMA.
There was a Band-Aid, right, on the program. Don't leave that out.
Correct. The Band-Aid was they somewhat put a moratorium or a stopple, if you may. And this is on the federal level. It's through the Department of Homeland Security and FEMA, and it's all done by the folks up in Washington.
And they capped it and kind of like reversed it, right?
Yes.
In a sense.
They just said, wait a minute, we're not going to put the act through. We didn't think it through. It caused people to have a $30,000 or $40,000 premium. So we're still in that phase right now. Well, what does that tell us? It could still be potentially voted on by Congress and Washington to maybe reverse it again. We just don't know. The good news is for us here in our area.
Well, I can tell you, let me chime in on that, Paula. As realtors and somebody like myself that's very involved, I participate in Great American Realtor Days. So we go to the Capitol, we go to Tallahassee. You know, we talk about these issues that are imperative to politicians that are the ones that actually vote these things into play.
Good that you do that, and please keep on them and let them know they cannot take this Band-Aid off. It would be detrimental.
Yeah.
It would be detrimental. It would just kill the Florida economy.
Yeah, it would kill our market here, and it would also affect a lot of people because, as you know, if your homeowner's insurance is canceled or something happens and you have to force place insurance, this is going to push a lot of people out of their home.
It can, and it did there temporarily. So it can be voted upon again here. It can come up. It might come up today. Maybe it won't even be on the docket for 9 months. We just don't know. But please, and even our consumers out there, make your voices heard. We can't have flood insurance premiums going to $40,000 in our area. So right now we're in that stopple phase. But what does that mean? Some of the folks that have the older homes are back to getting their credits or what they call subsidies. But they did put in some new laws that came in effect April 1st of this year. As of April 1st, new policies and even renewal flood policies do have a new surcharge for homes that are not your primary residence.
So second homes, we have a lot of snowbirds here.
Yeah, snowbirds and investors. So to those of you that have clients or those yourself that may have a current flood policy, you will be receiving in the mail from FEMA and sometimes on the envelope too. It says Homeland Security. So some people freak out when
I
they get
guess
that.
so.
What am I getting from Homeland Security? It's your flood insurance information. So don't freak out.
What's that surcharge like? How bad is that?
Yeah, they charge $250 per policy now. And also there is an increase in rates every year, generally like 10-20%, depending. The non-primary homes do receive a higher bump up in their rates. What does that mean for those of you that are in your primary home? If you have a policy now, you have received paperwork saying, gee, can you please prove this as your primary residence? You generally just send in a copy of your license or utility bill to prove it's your primary residence. You will not get that surcharge. What a lot of folks are doing, though, they get the letter, they just kind of throw it in the junk mail pile, they don't respond, and now when they get their renewal, oh my God, I got this charge.
The fire, yeah.
Exactly. The good news is for Florida, too, there have been private insurance companies coming in, so there are some options other than having a FEMA policy. There have been Lloyd's of London.
Goodness.
Yes. Lloyd's of London, who many of y'all might be familiar with, they started insurance about 400 years ago. They came into the marketplace and have opened up, and so have other private carriers.
And they insure some crazy things. I'm glad that they're taking on flood.
They do. They do.
They insure like people's pinky and stuff.
They do. They used to insure Liberace's fingers and things like that.
Yeah, everybody hears those crazy stories. I'm sure there's other ones too.
But they have been doing flood along with other companies. Other companies have filed to start writing flood, so there are some options out there for you.
So more people are going to enter, more companies are going to enter the flood market?
Yes.
Or the pool of people writing insurance?
Yes, and they have filed to do so with the state. They have to get prior approval with the state of Florida until it rolls out.
How long does that process usually take for them?
It usually takes at least a year, I'd say. So till they file, until they get results and they're approved and whatnot. So that's a little bit of a lengthy process. But it's been filed and there are new companies writing. The other hot topic regarding the flood coverage is FEMA is remapping all of Hillsborough and Pinellas County here locally. What does that mean? They've got surveyors out throughout the counties. They are actually resurveying every plot of land we have in these counties. As you can imagine, it's a huge undertaking.
So this is happening right now?
This is happening now. It has been probably for going on about 2 years. It might be another year and a half until it's complete. But what they are doing is remapping our flood zones. What does that mean for us? You might be in what we call a preferred zone now, where you're in not a risky flood zone. You're in a preferred zone. Your lender might not be requiring you to carry flood coverage.
So this might mean, I just want to break it down and not go too fast, that someone's in an X zone or they're in something that does not require flood insurance at all.
Right.
And they're expected to remap some people into a flood zone.
Exactly. They might come, and when the new maps are in the computer systems, you might have been in an X or a preferred zone, and now, oh, ding, 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 you're in an A, like Apple, a risky zone, and your lender might send you that nastygram that says, gee, you need to carry flood insurance now. So there is remapping being done. We tend to think in our industry, although we can't, we're not genies to read the crystal ball, but we tend to think there are going to be some major zone changes in some of the historic flooding areas, like Inner Bay and South Tampa. Some of those zones are still considered preferred. We think more of those are going to be going risky and whatnot. So there are flood zone changes to come. They did just complete Pasco County, and it's in the books already.
Oh, when is that supposed to roll out? Like when we're supposed to see that?
I would say probably near the end of the year. It's still forthcoming. It's a major undertaking. In about the past 12 to 15 years, they've already remapped us a couple times. This is our third go around recently. So something for us to be on the lookout for.
I mean, it's not anything new. How often do they remap? Do you know?
Some areas, like out in Kansas, they might not have ever remapped, hypothetically.
But we seem to get remapped a lot.
We do get it a lot, and I don't know the reasoning behind that, but we do.
Maybe
we do
flood
see
claims?
It a lot. Well, we haven't really had that many in comparison to the Midwest historically.
I guess that's true.
Yeah, in the past 100 years. Of course, Katrina was a whole different ballgame.
We always are now, aren't we?
But I do like to share with flood. What is flood coverage? It is for rising tidal waters. So if a hurricane comes through and blows your roof off, and you have rain and wind pouring in, and the house is getting all wet, it's not a flood claim. It's rising tidal waters. That would actually be a wind claim because the wind did the damage. If your pipe breaks in the wall in the kitchen, floods out your kitchen, let's say, it's not considered a flood. It's not rising tidal waters. So for flood insurance, that is the coverage that will protect you. Rising tidal waters. In some of our neighborhoods here, in older neighborhoods specifically, sometimes during a heavy rain, the streets might flood. If that comes up into your house, that's actually considered a flood as well. I've heard people say, gosh, I'm up on the 5th story of my condo. Well, guess what? Sometimes you can get a flood claim up there. I had a condo out on Madero Beach, a huge high-rise, and the bottom floor was all parking, garage, and mechanical, and the waters came up in a July thunderstorm, and it caused a spark in the break rooms, and the sparks traveled up and caused fires up on the 9th and 10th floor of this condo. What was actually considered a flood event. The peril of flood is what started the fires. So people up on the 9th floor actually had flood claims. So
homeowners did not pick that up?
Correct, because the peril that started the fire was the rising floodwaters, which is a flood. That does happen a lot. That happened in Superstorm Sandy when all those blocks and blocks of homes burnt down. The rising waters came up and started the fires, and it's considered a flood event when that happens. So
That is so crazy. So, which
It is.
leads me to my next question, which is like the $1 million question, right? Since FEMA's remapping all these areas,
Yes.
and let's say like I'm on the water now, but I'm not in a flood zone.
Right.
So my flood premium's like nothing.
Okay.
And I ended up canceling it, and now you're making me think I probably should get it.
Yes,
But
yes.
so my flood
Yes.
quote, if I'm not in a flood zone now, it's probably a good time for me to get it,
It
right? Because I'm going to
is.
be grandfathered in.
that is such a great point. Flood insurance in preferred zones is very, very inexpensive. It's $450 a year or less, depending on how much coverage you have. If you get that now in a preferred zone, when they come out with the remapping, if they have remapped you, that does give you incentives for the next couple years to somewhat grandfather you in to give you reduced rates. So that is food for thought for everybody. Florida is actually one big flood zone, technically. Just that
We're
some zones
peninsula.
are, right, and some
We're
of
a
us,
sandbar.
right.
I mean, I guess to hear people say, "Oh, I want to live in the middle because I don't want to have to worry about
Yeah.
flood," and I'm like, "Yeah, I've lived here my whole life, but we're still a freaking peninsula." I mean,
right, and peninsulas on peninsulas in some of our
Exactly.
areas, Inner Bay and Pinellas
Yes.
County, and
well, that whole South Tampa area. I mean, my husband works for the city of Tampa and what used to be known as stormwater.
Yes.
Right. And so now they're all under DPW, which is Department of Public Works, but he deals with it all the time. Like when we have the water, I mean, Bay Shore is
South
technically
Tampa.
a couple feet under sea level.
exactly.
So they're doing everything they can to keep the
Exactly.
water out. But you know what? When the storm comes in, they're coming in the pipes too.
right, it just comes up, but that is considered for flooding. I always suggest to our realtor partners, we advise that you don't ever tell anybody, no, you don't need flood. Not good verbiage to use in this litigious society we live with. You can just say, oh, you're in a preferred flood zone.
Yeah,
Good
but
way.
preferred means technically what they classify as not a flood zone or not a required. You have to have flood insurance by your lender flood zone.
Correct,
Right.
correct. But we just don't think it's a good point of business to say you don't need flood insurance. You know, we don't want you guys to say
Yeah,
that.
I
out
would
there.
never
Yeah.
advise anybody of that because I have no idea if they would need flood insurance.
Exactly. Just you're in a preferred zone or you're in a risky zone. And by the way, different lenders have different guidelines. We have one lender up out of New York City that anybody getting a policy in Florida that has them as a lender, they require the flood coverage. Doesn't matter the zone. That's just that particular lender's guidelines. So that can vary from lender to lender.
Yeah, and most of them I think pull a flood cert.
Yes,
And whatever
yes.
the flood determination says you're in is what if they determine if they require you to have
Exactly.
flood insurance or not.
Exactly.
So, and I noticed you said that some of these other companies are buying out policies from citizens hopping into
yes.
the homeowners topic.
Yes. This is back to the homeowners. I'm sure most of y'all that are here in Florida are familiar with Citizens, our state pool of insurance.
A lot of people in Pasco had citizens because there wasn't a lot of options.
A lot. Matter of fact, I have many companies now that are more open to writing in Pasco for those folks that will say, gosh, all I can get Citizens. There are other companies writing there now. They're great, solid companies. But Citizens was founded after Andrew devastated Miami. It morphed into the largest homeowner carrier in the state, which it was never meant to be. So they have started, and they did this years back. It's called formerly the Depopulation Program, where Citizens allows other insurance carriers to come in and take over your policies. That can be good, that can be bad. What we've seen historically, if your policy does get taken out to another carrier, usually a year or two down the road, you see your rates double and triple. So ultimately, it is a rate increase for the consumers. We see that down the line.
You know, Andrew, when Hurricane Andrew hit at the time, because my background is mortgages and I owned 3 mortgage companies at the time, I wrote all over the state, including South Florida in that area. And I can remember some clients that had prepaid for their homeowners insurance and they were getting ready to close escrow. And, this was just one of the companies that did it a lot. Allstate, for example, they prepaid for it, even outside of closing, because, once
Right,
the hurricane's in the box.
Exactly.
They literally canceled their policy and sent them back their premium because they saw how big the storm was and they didn't want to write the claims. And it was bad. At the time, I was dating a guy that went to University of Miami.
Oh, my
And I
gosh,
hadn't
so
even
you know.
went down there till 3 or 4 weeks after. And it was
Sure.
still horrible. It looked like a third world country, like a bomb went off. I mean, it was bad.
Well, and that's what happened. Why Citizens was formed at the event of Andrew. It was $20 billion in claims at that one event, and at that time, that was the largest disaster at one time our country ever had. Of course, that was pre-Katrina and September 11th.
Which she did more, right?
Yeah,
I think.
she did.
Yeah.
Oh, she did more. Yeah, and September
course.
11th, of course, as a whole. But at that time, that was so overwhelming. It caused 16 Florida homeowner insurance companies to go bankrupt. So these poor people, everything, as you said, like a war zone. They lost everything. Insurance company bankrupt, not a dime to pay a claim. That's when Citizens was formed to help people. So that's the beginnings of that. 20-some years ago now. But the depopulation program is hot and heavy right now. There's a lot of activity going on. If any of you or your clients receive one of those letters, please call your agent and address it with them so they can help you through that program.
That someone else is buying the policy.
Yes,
It's no longer
yes.
Citizens.
If you don't want to go with that other company, you are required to sign the declination letter. If you don't get that done in a timely manner, you can issue a window to decline the offer.
So they're just going to pick it up automatically and sell it like they do a mortgage note.
Exactly. Very, very similar. But there's a lot of that going on now. But Citizens has come down. They were insuring about 1.5 million homes. They've come down now to, I understand, under 1 million. So they're getting a little bit more manageable. But the other good news is, though, there are more companies now writing homeowner policies in Florida than ever before. There are 119 companies writing homeowners insurance.
Well, something good always comes out of the bad, doesn't it?
Sure does.
Thank you, Paula Blanda.
does.
You're listening to Tampa Home Talk. After the break, when we come back, we're going to dive in a little bit deeper with John Barry, and we're going to talk about Obamacare. And so many people have had questions about Obamacare. Feel free to hit us up on Twitter, on Facebook. Look for us at Tampa Home Talk, and we will get your Obamacare questions answered. We'll be back in a minute.
It's already started without you, so find your desperation, 'cause it's time to go.
Hey, Katrina Madewell here. Just wanted to make sure you know how to reach us on our off-air number. If you'd like to connect with myself or any of our guests, you can call us at 813-377-2775. Again, this is Katrina Madewell, host of Tampa Home Talk, and to connect with myself or any guests we have on air, just call or text at 813-377-2775. 813-377-2775.
Hey, it's Paula, your insurance lady. You've got your insurance good news of the day. Did you know that there are private companies in Florida that are offering flood insurance? That's great news. In many cases, a private carrier can offer you better rates than your old FEMA policy. So that's good news of the day. We've got private great carriers offering flood insurance in our state. So check with me or check with your agent today. I'm Paula, your insurance lady.
Welcome back, and you are listening to Tampa Home Talk. I'm your host, Katrina Madewell. Thanks so much for rejoining us today. We're talking all about insurance, and if you missed the earlier part of the show, we had Paula Blanda in, and she was talking all about a lot of these changes that are continuing to go on with FEMA, as well as them remapping the area. So if you missed any part of that show, you definitely want to catch it in its entirety. All of our shows are available on a podcast, and we will post them across the web on Facebook, on Twitter. Just search for us on Tampa Home Talk. So without further ado, we're going to continue with Mr. John Barry. I know that Paula did a lot of the talking at the earlier part of the show, but you had so much stuff to cover regarding Obamacare, so we figured it would be a good way to break up the show.
Well, it's a subject that can't be explained easily in a short period of time, unfortunately.
Yes, I gathered that from our call the other day. It's so complex. So, I mean, by all means, John, start wherever you want, but you're pretty much, that's what your specialty is. You do health, life, accident, individual insurance.
Correct. And that's an important distinction, individual insurance. My market is people who are individuals, self-employed, people who work on 1099, and small business owners who I'm trying to get off of group insurance and into the individual insurance marketplace.
And there's so many like individual self-employed people. I mean, and a lot of people think, wow, it's not, conducive to get flood insurance, to get health insurance, or can they afford it? And how bad are the deductibles? And you're going to bust some of those myths and talk a little bit about that today.
Sure. Maybe a good place to start is where are we date-wise? It's the middle of May, and what that means in the health insurance world now is we're open enrollment is closed. We're in the special enrollment period. So if you are without health insurance or you lose your health insurance in the special enrollment period, the only way that you can get Obamacare, which is affordable care. Well, let me backtrack for just a second. Let's talk about Obamacare, because many people think of, well, what kind of insurance is Obamacare? And the answer is that Obamacare is not insurance.
Excellent point. Excellent.
Okay, so what is it then? The answer is that it is rules and regulations established by the government, the Health and Human Services Administration, administered in part by them and also by the Internal Revenue Service. It sets up what are called essential health benefits, which are common and mandatory across all insurance policies. But individuals buy their insurance from the insurance companies. So Obamacare is not insurance. You're buying it from whoever it happens to be. In our market, the major carriers are Assurant, Aetna, Coventry, Cigna, Humana, and United, as well as Blue Cross Blue Shield of Florida.
Let's say I thought Blue Cross Blue Shield was doing a bunch of individual policies for a while.
Yes, they are also in the marketplace. Those are the major carriers that service the marketplace. So let's look at what Obamacare is in terms of insurance. Essential health benefits are there. One of the most important that people should understand is that all health insurance now is a guaranteed issue under Obamacare or the Affordable Care Act.
Meaning no one can be denied health insurance.
You cannot, there is no such thing as a pre-existing condition. You cannot be denied. You fill out an application and you're accepted by the insurance company and you're covered. That's an important distinction. The second thing is all insurance policy now, all policies include an annual wellness visit. That's important because for whether you're a man or a woman, you basically go and you tell your insurance, tell your primary care provider that you want your wellness visit. That's covered 100%. That doesn't cost you a copay, not a penny out of your pocket.
It's like your normal annual physical.
Correct. For a woman, it covers mammogram, pap smear, your blood work, and that sort of thing. For a man, it's the same kind of thing, including prostate screening. And it covers also colorectal cancer screening if you're of the age where that's a recommended procedure. So those are some important distinctions. Let's go back now to the timing. We're in special enrollment, so you have to, in order to get Obamacare, if you do not have health insurance, you must have what's called a qualifying life event. What are those? Typically, they're if you're single and you get married, if you're married and you get divorced, if you are a family and you add a child through childbirth or adoption, you can get health insurance. If you have health insurance, but you lose it because you lose your job or your employer ceases to offer it as coverage, that's a qualifying event. If you move, let's say, from Massachusetts, some people moving into the state of Florida from outside the state, that's another qualifying life event. If you don't have any of those, you cannot get Obamacare under the Affordable Care Act with the essential health benefits, but there is an alternative, and this is important for people to understand. You can get what's called short-term medical insurance. Basically, you buy that on a month-to-month basis. The difference between that and Obamacare is it doesn't include all of the benefits that are mandatory, and there is underwriting permitted by the insurance company. They can ask you typically 5 or 6 questions about your health. And for example, if you've had a serious bout with cancer or heart attack or something like that, liver problems, they could turn you down. But basically speaking, it is legitimate insurance. It is catastrophic insurance, and you can buy it from now until the end of the year, at which time you'll be able to go back to Obamacare. Now,
when is the open enrollment period?
Well, this year, it's I don't know that it's been finalized. What we read from what the Health and Human Services is telling us, it's going to open on October 1st and close on December 15th. It's as an agent, it strikes me as madness to put all of the people into this bottleneck, because what it does is it taxes the systems. The insurance companies,
right,
in particular, they've got all of this volume to handle.
It's like tax season for CPAs.
Yeah,
right?
Exactly. You can get your driver's license, on your birth date and your birth month, and they give you like a 60-day window. The federal government hasn't figured out that tactic yet. So we're going to do it all between the 1st of October and the 15th of December. And that's for an effective date of January 1st of 2016. Now,
that's kind of craziness, because that's right before the holidays too.
Exactly. At least last year, it started on November 15th, so it was about a week before Thanksgiving. You went into the holiday season of Hanukkah, Kwanzaa, Christmas, and then New Year's. And the last thing on people's mind during the holiday season is health insurance.
Right.
I mean, they don't want to talk about it to begin with, let alone talk about it during the holidays.
Especially getting this new required Obamacare because you didn't have insurance.
Exactly. But let's talk about now the next most important thing for people to understand is the cost of Obamacare and what happens to you when you get it. There's been a lot of talk about the fact that Obamacare is not affordable, and that is truthful in many respects in terms of the monthly premiums as well as the deductible. So let's try to give people a primer on what that's all about. The first thing that you want to ask yourself after you say, okay, well, I need health insurance. How do I go about getting it? The first thing you want to find out is, are you eligible for a subsidy? What is a subsidy? A subsidy basically is an amount of money that the federal government is going to pay in your name to the insurance company on a monthly basis to help reduce your out-of-pocket monthly cost for the premium.
Now, how hard is it to actually get that? Because they were having a lot of problems with the site being down, right, and that type of stuff?
That's correct. They had a lot of problems year before last, huge problems. We still had problems in the last cycle, although they were dramatically reduced. It was easier, but still there were problems. And we expect that, again, it's because of the volume problem. You get so many people trying to access these computer systems that there's bound to be breakdowns. But here's what I recommend. Rather than do this yourself, you see all the advertisements on TV, oh, health insurance, go get it at healthinsurance.gov. It's really easy. It's a lot of fun. It's not easy. It's not a lot of fun.
There's a lot to know.
There's a lot to know. And there are people out there like me who are licensed, and I emphasize licensed insurance agents. I'm licensed, as all of us are, by the state of Florida. We go through continuing education to maintain our licenses. And in addition to that, we are trained in detail by the health insurance companies that we represent. I happen to represent 6 insurance companies. I do that so that I can shop options for my clients. So what you want to do then is not go to healthcare.gov, but find a licensed insurance agent and work with that agent. They can make your life a lot easier and avoid mistakes. Here's what you have to do. You have to determine first if you're eligible for that subsidy I spoke about a few minutes ago. How do you determine that? The subsidies are based upon the size of your household. Are you 1, 2, 3, or 4 people or more? And what is your household income? And that's a fairly easy question to answer. It is your adjusted gross income with some minor modifications. You know, it's never adjusted gross. The government's got to make some modifications to it. So it's called modified adjusted gross. You start with the number that is on the bottom number of your federal tax return if you file a 1040. That's adjusted gross income. Then you look at that number, and if you are an individual, one-person household, you must make more than $11,670 and less than $46,680. That would qualify. You're in the window that qualifies you for a subsidy. That subsidy can be calculated fairly easily. There's a tool that's available to do that from the Kaiser Family Foundation that's recognized by the federal government, and it's a very accurate tool. Let's say that you're a 4-person household. If you must make a minimum of $23,850, and you can make as much as $95,400 and still be eligible for a subsidy. So that's.
Now, is there a chart that tells you an idea how much the subsidy is based on income and family size?
There's a calculator that it's from the Kaiser Family Foundation. You go to
Oh, that's the one you're talking about.
Yeah,
okay.
KFF, K as in Kaiser Family Foundation, KFF.org, and look for subsidy calculator. You put in some basic information in there, and it gives you a fairly accurate reading as to the amount of your subsidy.
That's great. We're going to post that on our website on TampaHometalk.com.
Okay, I'll give you that information offline, and we can go ahead and do that. So the answer then is, am I eligible for a subsidy or am I not? And once you make that determination, it determines your path to actually obtain health insurance and enroll in a plan. Let's say that you are eligible for a subsidy. The only way that you can get that subsidy is to apply through Health and Human Services, healthcare.gov. Now, you can do it by phone, you can do it electronically, but it's simpler if you do it with an agent. And I'm only one of hundreds of agents in our area that can help you do that.
And so this is something you can basically do on behalf of the person you're helping
That's
get
correct.
insurance?
And by the way, there's no cost to your health insurance agent for his or her services. We are paid on the back end by the insurance company if you enroll through us. And by the way, the cost of your policy, your monthly premium, doesn't change whether you use an agent or not. It's the same.
That's good information to know.
So what you have to do then is that you have to get from Health and Human Services a determination. They give you a letter in a PDF file on the computer that gives you the exact dollar amount of your subsidy. So let's say, for the sake of this discussion, I brought some examples here.
John, I'm going to have you hold that for just a second because I think we're getting near the bottom of the hour to take a really quick break. I'm going to let you gather your thoughts, collect your notes, and we're going to pick up the conversation where we left off as soon as we come back. Back in a moment.
You've heard this before. Interest rates are at all-time record lows. But if your interest rate is 4% or above, you owe it to yourself to call Silverton Mortgage Specialist. Silverton is a direct lender, and the best part about this is that the entire loan process is handled in-house. From application to close, we do it all in the same building, which means that our loans close fast and our clients know what's going on every step of the way. Our contact info is located on TampaHometalk.com under Radio Show. What makes Silverton different? Products. We offer VA, FHA, USDA, and conventional loans pricing. Best rates with the lowest closing costs. Process everything in-house. It's handled right here and not outsourced to anyone that no one can reach. This way we can avoid surprises. Our people are simply the best, and we know you'll agree. What will closing Silverton Mortgage Specialist mean to you? A smooth process, real home loan value, and personal attention from real professionals. Silverton Mortgage Specialists are here to serve you. Visit TampaHometalk.com under Radio Show for all of our contact details. NMLS 109600 is an equal housing lender and Florida and Georgia residential mortgage licensee.
Tampa Bay's Tan Talk. Entertaining and informative radio for the Sunshine State.
Welcome back, and you're listening to Tampa Home Talk. I'm your host, Katrina Madewell. In studio today, we have John Barry. We're having a fabulous conversation about Obamacare, kind of breaking it down, explaining it, taking the time to really get a lot of the facts and the figures. And I've learned so much from you just today and the other day when we had a chance to talk, and I appreciate your time.
Well, I'm happy to be here and try to take some of the questions away from people and give them simple information that's hopefully easy to understand.
Yes. So where we left off, and if you miss any part of our show, you can catch it in its entirety. They're all available via a podcast, and you can search for us at Tampa Home Talk, TampaHometalk.com. We're on Facebook, we're on Twitter. Podcast is pretty much everywhere, and we'll also post it, of course, on your show card. But we were talking right before the break about the subsidy and how the government will actually pay a portion of your individual health insurance benefits on your behalf.
Okay, so where we left off is if you are eligible for subsidy, you must go through Health and Human Services, healthcare.gov. That can be done by computer or by telephone. The end result is that you will get a formal letter sent to you electronically that gives you the exact dollar amount of your subsidy. You then take that information and you go to the insurance company and you apply for a plan, and the insurance company then they will get the information from the government as to who you are, what the subsidy is. You get the same information, you go apply for a plan, and here's the way it would work. Let's say, for the sake of the discussion, I'll give you an example.
Yes, examples are awesome.
Okay. One of my clients is a 58-year-old male and a 53-year-old female. Their adjusted gross income is $35,000, and they were eligible for a subsidy of $763 a month. That's a significant subsidy.
That is significant.
They chose a plan that cost gross $826. They applied their subsidy, and their out-of-pocket monthly costs are $63.
Wow.
So that's what makes the Affordable Care Act affordable. I'll give you another example. This is a household of three people. A 39-year-old male. His wife is also 39. They have a son who's 8 years old. Their adjusted gross income is $22,000. Their subsidy was $635. They chose a plan that cost $677, so their out-of-pocket costs are $42 a month. That's a pretty good deal for a family whose adjusted gross income is a three-person family for $22,000. I have a family of four. They make in excess of $100,000 a year. They get no subsidy. Their plan that they chose cost them $818 a month. So you can see and get some idea of how the subsidy works for people.
It's a pretty significant difference.
Absolutely. Absolutely. Now, let's talk about that couple that have no subsidy. Okay. If you have no subsidy, do not, I repeat, do not, capital D-O, capital N-O-T, do not go to healthcare.gov. You cannot buy health insurance there if you are not eligible for a subsidy. What you do is buy directly. Right. What you do is go directly to the insurance company and buy your insurance there. And of course, again, you recommend that you use an agent to shop for you. So that's kind of the path that you have to take. All of this.
What I'm curious about, like in the examples that you gave, John, was the health insurance is like under $100 a month. In those two examples that you gave, what kind of insurance is someone getting for that?
It's good insurance because it is governed by the rules that are Obamacare. All of these plans are common in that they have 10 essential health benefits. We don't have the time to go into the detail of all of those, except to say that, for example, maternity and newborn care is a mandatory requirement in all of these. By the way, if you're 60 and a couple who, for example, a woman who's been through menopause is not going to have any more children, you still buy a policy that gives you maternity and newborn care. It's one size fits all when it comes to federal rules. But
that's usually how it is, isn't it?
Yeah, that's usually how it is. So all of these plans have these common elements. The preventive visit that I talked about earlier is also common. And you can go through all of them. They can be explained, or you can read about them if you want to. Go to healthcare.gov. I'm not saying you can't go there and get information.
Right.
I'm just saying it's best for you to work through an agent because of
that already knows everything and understands the rules and can help guide you.
Exactly, because here are the things that a lot of people get caught up and don't understand. You pay a monthly premium. All of these plans also include the dreaded word deductible. What the deductible is in addition to your monthly premium, you pay a certain amount of money out of your pocket for services from your doctor, from your clinic, whatever, for your prescription medications before the insurance company joins in. Those deductibles have turned out to be very high. They top out at $6,600 for an individual and $13,000 for and change for a family. That's a lot of money to reach into your pocket for, but that's the way the healthcare system works.
Now, is that right away before they cover anything else outside of those mandatory items?
Generally speaking, before they cover anything else, you have to meet your deductible. Now, you can get deductibles lower than $6,000. You can get a deductible as low as $1,000, but you will pay more in a monthly premium. That's a basic principle of health insurance. The higher the deductible, the lower the monthly premium. The lower the deductible, like $1,000, the higher the monthly premium that you will pay.
So if you go to the doctor and it's not a wellness visit, let's say you're sick and you have the flu, and you're within that deductible period of the first $6,000 or $5,000 or whatever it is, will they cover any portion of that bill?
Well, here's now where, yes, but.
Okay.
Okay. And this is where the subtleties come in. There are plans that are deductible only. So what that means is that the insurance company doesn't pay anything. You pay until you've paid your whatever deductible you choose. And there is choice there to you as the consumer. So you choose whatever your deductible is, you pay at that point, then the insurance company takes over and they pay 100% after you have met your deductible. There are plans that offer co-pays, and a co-pay could be you get 3 doctor's visits for each of the insured in your family at a cost of $50 out of pocket. After that, if you keep going to the doctor, you'll pay the full amount. It will calculate and accumulate against your deductible, and then again, when you reach your deductible, the insurance company takes over.
So this is 3 doctor's visits in a year?
In a year,
okay.
Yes. Per person under who's insured under the policy. Now, there are plans where you can get unlimited,
right.
or 3, and insurance companies offer different kind of incentives for these.
So the co-insurance that you're mentioning, is that a separate insurance policy that kind of works side by side with the healthcare policy?
What co-insurance does is co-insurance offers these co-pays. What co-insurance is it basically says, okay, your deductible is X. Once you reach a certain level of your deductible, the insurance company will join in and share costs with you. Usually the ratio, the most common is 80-20. They pay 80, you pay 20. 70-30 is another combination until you meet the deductible. However, there's one more cloud looming over your head here, and that's called the maximum out-of-pocket. The maximum out-of-pocket is the most money that you will pay in a calendar year for coverage, no matter what happens to you. In some policies, the deductible and the maximum out-of-pocket are the same. In other policies, the deductible is lower than the maximum out of pocket. That's where coinsurance comes in. I hate to have to explain this to people,
Right.
but it is complicated. That's why you really want to work with an agent, because they can sit down and
Right.
take the time to help you
Help
understand.
explain all this to you.
These
now,
nuances.
these are negotiated rates still too, correct? Because you're under the healthcare insurance. Because I know, like, if you go to the doctor yourself versus you go under an insurance plan, they're negotiated rates, right, with that healthcare provider?
Well, now you're talking about networks, and we need to touch on networks for just a minute.
I've opened up a whole new can of worms.
A whole new can of worms. The answer is yes. The insurance companies then go out to form networks of providers, doctors, hospitals, clinics, all those sorts of things, and they negotiate rates. So when we say you are in network, the insurance company is saying you use these providers in our network because we have set the rates. If you go outside the network, now all the insurance companies are basically saying we're not going to cover you. Out of network, out of luck. You pay whatever that charge is, and don't even call us. We don't want to hear from you. Use our network providers. Now, that raises another question. You've heard a lot of discussion about, can I keep my doctor? Meaning, is my doctor going to be in the network? And the unfortunate answer to that is, in most cases, the clients that I experienced the last 2 years lost their doctors. Why? Because in order to save money, the insurance companies reduced the number of doctors in their networks, or they paid them lower fees and the doctors walked away. So it's a question. If your doctor is important to you, that needs to be part of the discussion that you have in finding the right insurance policy for you.
Because that doctor may be on one company's in network and not on another.
Or within an insurance company, they may have an HMO, which has fewer doctors. Your doctor might be in the PPO. You have to pay a higher premium to get that. That was the little asterisk that President Obama announced when he said, you can keep your doctor. You can keep your doctor asterisk if you're willing to pay higher. And that has proven true countless times in the clients that I've served.
Right. Well, I mean, who are you seeing going on these other policies? Are they new doctors or?
Well, younger doctors, doctors who have a well-established practice. It's hard to say, how they make that decision. I think from a doctor's standpoint, it's probably just a business decision.
Right.
Can I afford to treat my patients at this reimbursement rate? Am I willing to do that or not?
But with experience comes knowledge and time and money. And, it's like you said, it's a business decision at the end of the day.
Yes, you're absolutely right about that. The other thing to be aware of is that if you are an individual who has a list of prescription medications that are important to you in maintaining your health, don't assume that all insurance plans and all insurance companies have your drugs. That's research that you have to do ahead of time. The insurance companies have tried to refine the list. Most drugs are covered, but they're covered in different ways at different levels. The insurance companies have tiers. Sometimes they will offer you only a discount card for some plans. Other plans will have a fairly clear layering of cost related to the complexity of the medication that you're taking. So researching where your meds are in that strata is important ahead of time, because that can influence your decision on which insurance company offers you the best plan.
Now, when someone comes in to visit you, John, and they're talking about this for the first time, maybe they were with an employer and now they're retired or whatever the situation is, I imagine you probably have like an intake form or something asking a lot of these questions to spark the conversations that would be appropriate to place them with the right insurance carrier.
Oh, I have my own form where I gather information. I mean, to do a quote is actually relatively simple, because all I need is the names, the dates of birth, do people smoke or don't smoke, and what is your residential zip code? And you can generate quotes. That gives me the ability to shop. With that information, I can look at 6 different insurance companies for a particular client and begin to filter through. Then you have to get into the discussion. It turns then to deductibles.
Which anybody can give you a quote. It's the difference between someone that's seasoned and not.
Exactly.
To spend that extra time to take with you to gather all those facts and figures and things that are important, because I'm sure the last thing someone would want to do would be to get a plan during open enrollment and find out that their medicine's not covered.
And I've had that happen where people have discovered, not my clients, but people have come to me and say, well, what can I do? And the answer is you don't have a lot of flexibility. If you have signed up and been accepted in Obamacare, if you decide to drop it, you have to wait to the next open enrollment period, and your alternative would be to switch to this short-term medical that I referred to in the first segment. So it puts...
Is that kind of painful? Like, is that insurance expensive, the short-term medical?
The short-term medical is actually, it is affordable. It's not cheap, but it is affordable. It is legitimate insurance. Let me say one other thing, which I think is beneficial to the audience in general, and that is this. When you think about health insurance, think about it in the same way that you think about automobile insurance. This is the sort of disservice that is done to people. In automobile insurance, you do not file a claim to change the oil and rotate the tires. You don't file a claim for your 30,000 or your 60,000 mile checkup. Why you have automobile insurance is if you're in a wreck and you've got thousands of dollars of damage to your car, and perhaps personal injury, you want the insurance company to restore your automobile. Health insurance is no different. What you really don't, most people can afford a $35 or $100 doctor visit. What you really want to be protecting yourself against is the catastrophic event. And we've gotten now into this thing where we say, lazy, I'll run to the doctor, it only costs me $30. Well, the truth of the matter is it costs more than that. And if you're running for no particular reason, other than psychologically it makes you feel good, you run up the cost of health insurance. What you're really protecting yourself is, and this is a personal example, someone very close to me, out of a clear blue sky, had an emergency appendectomy. One of the healthiest people that I know, happens to be my wife. And out of nowhere, we wind up in an emergency room, and she has to have her appendix removed. That bill from a hospital here in town in St. Pete was $34,000. Our deductible was $4,000. We were done. That's what you're protecting yourself against.
Right.
And cancer, heart attack, all those kinds of things we understand, but there are all kinds of other things like an emergency appendectomy that come on you out of the blue, and no one wants to have that bill. It ruins you financially, or it could ruin you for several years.
Right. It's like car insurance or life insurance.
Exactly.
Especially if you're like me and you have kids, if you had a mortgage, you wouldn't want to leave that burden to one spouse or the other.
Right. Now, that's a good point. You raised the fact that you have kids. As a parent, if you've got kids, then what you want to look for is a policy that probably has some copays, because kids get sick. And you have to take them to the doctor.
Yeah.
Maybe not you and your husband, you're healthy, but the kids are always sick. You got to take them. So you look for a plan.
Especially the younger they are. I think the more they're at the doctor.
So in choosing, what you'd want to do is look for a plan that offers copays so that you can get 4, 5, 6 visits in for your kids with a $30 or $40 copay. That will reduce your costs. And then what you're doing is you're sitting around hoping that one of the kids doesn't fall out of a tree. Because when kids fall out of trees, they fall out of a tree, then you're in the emergency room, and the next thing you know, you got a $5,000 bill, you've hit your deductible.
We've had our share of broken legs, stitches, and all the above.
All that kind of stuff, sure.
You're listening to Tampa Home Talk. We have to take a really quick break, John. When we come back in just a moment, we're going to continue our conversation on Obamacare. And I know that you're going to get into a little bit more specific details and guidelines and all the rest of the stuff we left off. If you miss any part of today's show, catch it in its entirety at Tampa Home Talk. We're also on Facebook and Twitter and across the web. Just check us out on Tampa Home Talk. Back in a minute.
You're buying a house. Congratulations. So while you're worrying about the paperwork, leave the moving part to us. We're Woody & Sons Moving Company, a Florida licensed and insured mover, and we offer same-day written estimates. Plus, no sneaky mileage, stairs, or additional stop fees. All we ask is that you check out our great ratings on Google and Angie's List, then go to woodyandsons.com to learn more. Whether you need a full-service pack and move or some extra hands, at Woody & Sons Moving Company, we move you.
Aaron Davis here, owner of Hillsboro Title, serving all of Tampa Bay. Our service strength and knowledge make us different. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Visit us on the web at thebesttitle.com. That's thebesttitle.com.
Welcome back, and you're listening to Tampa Home Talk. Thanks so much for joining us today. If you're just now joining us and not rejoining us and you missed the earlier part of the show, we've had some great topics today around insurance, and we kicked our show off with Paula Blanda talking about flood insurance, how FEMA's they're remapping a lot of these zones right now, sometimes in and out of a flood zone or a preferred area, and we've spent a bulk of the show actually talking about Obamacare, and it's such a complex subject, insurance. Like, to just break it down and understand all the facets that go into that. Definitely recommend you connect with someone like John Barry at JB Health and Life Solutions, because he really is an expert in the field. He understands insurance. He can break it down and ask you the right questions so that you get the right coverage and all of that sort of stuff. So by all means, pick up where we left off before the break, talking about, insurance. And that was such a good point that you brought up before the break, John. People don't think of health insurance as, life insurance, for example. It's a catastrophic event. It's a what if something major happens, I get cancer and I'm sick and I need chemotherapy and radiation, the really big things.
Right. And that's one of the reasons that Obamacare has become important. And this is something that I think will stick with the system regardless of whether changes come down the road or not. And that's the issue of guaranteed issue. There was, before, the insurance companies could eliminate you or not insure you because you had a heart attack or a bout with cancer or something like that. And that was completely unfair. Now, this health insurance under the Affordable Care Act is guaranteed issue. So that anxiety goes away. You can get the insurance, you can get the coverage you need, and that's a really positive benefit. Let me talk about a couple of other things that we haven't touched on yet. And this is an important thing. Once you get your insurance, or you complete the enrollment process, if you will, there's a couple of things that have to happen. Number one, you need to make your first payment, or the insurance company has the right to not insure you. So that's a key component. People say, well, I signed up for insurance. There are a lot of people statistically who signed up and didn't pay. Well, they're dropped by the insurance companies, and it's perfectly legal for them to do that if you do not pay your monthly premium.
And now you're not in open enrollment. And
yes, now you're not in open enrollment, so your only option would be the short-term medical, and you're not going to get a subsidy under short-term medical. And if you have a problem, you could be denied even that short-term medical. Here's another piece that's important. Once you make your first payment, you want to be sure that you get your ID card from the insurance company. We had a lot of glitches over the last 2 years with the federal government sending the correct information to the insurance company. And we went out there with people who became ghosts. They thought they had insurance. They had a response from the federal government that was never properly transferred to the insurance companies. And that took a lot of cleaning up, and some of that stuff is still going on. So it's important from a follow-up perspective. Now, here's a couple of things that trip people up. Let's say that you're in a household where one of the spouses has group insurance from the employer. That spouse, let's just say for the sake of discussion, it's the husband. The husband's covered by the employer, and he's got a really good deal because by law, in a group insurance plan, the employer must pay 50% of the premium for his employee. That employer doesn't have to pay a dime, not a nickel, not a penny, to cover the spouse and any children. So people will sign up and they get the health insurance and they're all excited because they got the health insurance, and then they have the money taken out of the paycheck. Most people don't pay attention as to what it's costing to insure the spouse and the children. And when I ask that question, people do not know the answer. They just see a certain amount.
I don't
of
know
money.
that answer.
Okay.
I really don't.
Well, it's the reason I'm raising it is because if you find out that what that amount of money is, it's worth doing a comparison to see if you can take the spouse and the kids off the company plan and put them on individual insurance, because the chances are very likely that that's going to be less expensive to the family.
Excellent point.
And people just don't know that, and the employers don't do it because their rates are based upon volume. How many
Right.
people do they have in the system?
They're planning on insuring X number of employees and
Yeah.
family members and that kind of stuff.
Exactly. So that's an important one. And by the way, now there is a test that if you're offered group insurance, then under certain rules, again, the government gets in here, certain rules, you have to take it. But it doesn't hurt to ask that question. It's an income test in terms of affordability, which is too complicated to talk about on the radio.
And we have to wrap because I'm getting looks from Chris back there on the board that,
Okay. All
that
right.
we're at the top of the hour.
Okay.
Thank you so much for joining us today, John. I know we probably could seriously talk for another hour. So if there's any talking points that you want me to continue, I will definitely post it on our website at tampahometalk.com. You can also find us on Facebook and on Twitter, where we will continue the discussion with John. And if you have any questions, hit us up on Twitter at Tampa Home Talk. We'll be happy to get those over to John and get right back to you right away. Thanks so much for joining us. Unfortunately, this week we're out.
There's no reason to belong. How we end up here at all. And I think it's time to think it's time to think it's time to go.
This is the Tan Talk Radio Network.